What if the future of money wasn't controlled by banks or governments, but by a code? Bitcoin, the digital currency that once seemed like a fleeting experiment, has now soared to nearly $90,000. But what's behind its wild ride, and could its next big surge be just around the corner? Let's explore. Bitcoin's story began over 15 years ago when it was introduced by a mysterious figure, or perhaps a group, operating under the pseudonym Satoshi Nakamoto. Back then, it was a revolutionary idea, a purely digital currency that functioned without the control of banks or governments. It offered a glimpse of a financial system powered by blockchain technology, a decentralized ledger where transactions could be verified transparently. But in its early days, Bitcoin was hardly more than an academic experiment with no tangible value. Its early adopters were cryptography enthusiasts who saw it as a tool for financial independence. Mining Bitcoin on personal computers was more a hobby than a way to earn money. There were no exchanges, and its value was determined through informal trades on niche forums. Yet this grassroots interest laid the foundation for something much bigger. Little did the world know that this obscure digital token would one day disrupt the very fabric of global finance. It didn't take long, however, for Bitcoin to attract its first real-world use case. In 2010, 10,000 BTC were famously traded for 2 pizzas, marking the first recorded commercial transaction involving the cryptocurrency. To put that into perspective, at today's prices, those 2 pizzas would cost nearly $1 billion. At the time, however, Bitcoin was valued at fractions of a penny, making it a novelty for tech enthusiasts. By 2011, Bitcoin was gaining momentum. It broke through the symbolic $1 mark, a major milestone for its credibility. That same year, its value soared to $30, only to plummet back to $2 within months. This volatility quickly became a defining characteristic of Bitcoin. Investors were drawn to its rapid gains, but just as quickly shaken by its dramatic losses. What made Bitcoin so unpredictable yet so irresistible to those who dare to invest? It was a roller coaster ride that would come to define Bitcoin's journey over the next decade. Bitcoin's volatility didn't deter its growing base of supporters. By 2020, it had matured into an asset that caught the attention of institutional investors. The world was in the grips of the COVID-19 pandemic, and governments were flooding the market with money to counter the economic slowdown. Fears of inflation drove many to seek out assets that could preserve their wealth. Bitcoin, often compared to digital gold, emerged as a popular choice. By the end of that year, Bitcoin had soared to $29,000, driven by investments from major institutions like MicroStrategy, which purchased over $1 billion worth of Bitcoin at an average price of just under $16,000. Other companies began taking notice, with names like Square and Tesla following suit, adding Bitcoin to their balance sheets. This marked a turning point as Bitcoin shifted from being a niche asset to a mainstream investment option. Retail investors, emboldened by institutional interest, jumped in, further fueling the rally. The narrative of Bitcoin as a hedge against inflation gained traction, solidifying its place as a political store of value. By then, Bitcoin was no longer just a speculative play. It was becoming a cornerstone of modern financial strategies. What made Bitcoin so volatile, and why has it remained such a powerful draw for investors despite its unpredictable nature? One of the key factors lies in its limited supply. Only 21 million Bitcoins will ever exist, a feature coded into its design to mimic the scarcity of precious metals like gold. Every 4 years, an event known as halving reduces the rate at which new Bitcoins are created, cutting miner rewards in half. This built-in scarcity often creates upward pressure on prices, particularly when combined with growing demand. The recent halving event in April 2024 is a perfect example. By reducing the reward for mining from 6.25 Bitcoins to 3.125 Bitcoins, the event effectively tightened Bitcoin supply. Historically, Halvings have been followed by significant price increases, and this cycle appears to be no exception. By November 2024, Bitcoin had reached a staggering $90,000, smashing its previous all-time high of $68,000 set in 2021. While halving events contribute to Bitcoin's long-term growth, external factors also play a critical role in its price movements. For instance, the collapse of the FTX exchange in 2022 sent shockwaves through the cryptocurrency market, dragging Bitcoin down to lows of around $16,000. Events like these highlight Bitcoin's vulnerability to market sentiment and institutional behavior. Conversely, positive developments such as the approval of Bitcoin exchange-traded funds in early 2024 can reignite investor confidence and propel prices to new heights. But how much of Bitcoin's future depends on these external factors, and can it maintain its momentum amidst such volatility? The current Bitcoin rally has been fueled by a unique combination of factors. One major driver is the political climate in the United States. The re-election of Donald Trump has created a sense of optimism within the crypto community. Trump, who once criticized Bitcoin, has now embraced it as part of his vision for a more innovative financial future. His administration has pledged to make the US a global leader in cryptocurrency and has proposed creating a national Bitcoin reserve. This shift in policy has bolstered investor confidence, signaling that the regulatory environment for cryptocurrencies might become more favorable in the years ahead. The role of high-profile figures like Elon Musk cannot be overstated. Musk's influence on the cryptocurrency market is well documented, and his relationship with Bitcoin has been both complicated and impactful. In 2021, Tesla's announcement of a $1.5 billion Bitcoin purchase sent prices soaring. However, Tesla later suspended Bitcoin payments, citing environmental concerns, which caused a sharp downturn in the market. Now, Musk is back in the spotlight as a key advisor in Trump's administration. His recent statements praising Bitcoin and Dogecoin have reignited enthusiasm among investors, showcasing his ability to sway market sentiment with just a few words. Beyond his public comments, Musk's companies like Tesla and SpaceX accepting Dogecoin for payments have added to the buzz around cryptocurrencies. Investors often look to Musk's moves for clues, as his actions have a ripple effect on the entire crypto market. Yet his unpredictable nature leaves some wondering, how much influence should a single individual have over a decentralized asset like Bitcoin? And can Musk's renewed interest sustain the momentum or spark another wave of volatility? Institutional investors have also played a pivotal role in Bitcoin's rise. Companies like MicroStrategy and BlackRock have brought a new level of legitimacy to Bitcoin as an asset class. MicroStrategy of accumulating Bitcoin as a hedge against inflation has inspired other corporations to explore similar approaches. Meanwhile, BlackRock's push for Bitcoin ETFs has opened the door for mainstream investors to participate in the market, further driving demand. Despite its growing acceptance, Bitcoin is not without challenges. Its environmental impact has been a persistent concern. Bitcoin mining, the process of creating new coins, consumes vast amounts of energy, much of which comes from non-renewable sources. Critics argue that this makes Bitcoin unstable in the long run, particularly as global efforts to combat climate change intensify. However, the industry is working towards solutions, with some mining operations adopting renewable energy to reduce their carbon footprint. Whether these efforts will be enough to address environmental concerns remains to be seen. As Bitcoin continues to evolve, the big question on everyone's mind is, where will it go next? Analysts are divided on the cryptocurrency's future. Some, like Standard Chartered, predict that Bitcoin could reach $125,000 by the end of 2024 and $200,000 by 2025. Others, like Cathie Wood of ARK Investment, envision an even more dramatic rise, projecting that Bitcoin could hit $3.8 million by 2030. These optimistic forecasts are based on the belief that Bitcoin will increasingly replace traditional stores of value like gold, capturing a larger share of global wealth. However, skeptics warn of regulatory hurdles and potential market corrections that could derail these predictions. The cryptocurrency's inherent volatility adds another layer of uncertainty, making such lofty targets both exciting and risky. Will Bitcoin live up to these sky-high expectations, or will unforeseen challenges reshape its path? But let's be real, Bitcoin's future isn't set in stone. There are plenty of challenges ahead, like tough regulations, sudden market crashes, and changing investor moods that could shake things up. The truth is, Bitcoin's wild swings make it both exciting and risky. Sure, the potential rewards are huge, but so are the risks. That's why anyone jumping into Bitcoin needs to tread carefully, keep a long-term outlook, and really understand what's driving those price moves. Bitcoin's journey has been nothing short of extraordinary. From its humble beginnings as an obscure experiment to its current status as a trillion-dollar asset, it's captured the world's attention and redefined the way we think about money. Yet its story is far from over. The next chapter will be shaped by a combination of technological innovation, regulatory development, and market dynamics. Will Bitcoin soar past $100,000 and solidify its role as digital gold? Or will challenges like environmental concerns and regulatory pressures slow its ascent? One thing is certain, Bitcoin's wild ride isn't ending anytime soon. The cryptocurrency continues to defy expectations, leaving investors and observers alike wondering what the future holds. If this journey through Bitcoin's highs and lows captivated you, don't forget to like this video and subscribe to the channel for more insights into the world of cryptocurrency. Share your thoughts in the comments. Do you think Bitcoin will hit $125, or are we looking at even bigger numbers? Let's keep this conversation going.